What's up, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers, so please be careful. Don't get yourself scammed. If you want up to 12 free stocks, Webull is going to give you up to 12 free stocks when you open a new Webull brokerage account. Put any amount of money in that brokerage account. They're going to give you up to 12 free stocks for just trying out the brokerage app. There's a link down in the description box of this video. Go click on that Webull link. Open up your new Webull account today. Go get that free stock. Go get that free money. I'm going to also send you a Webull tutorial video to walk you through how to use the Webull app to make your first trade. All you got to do is send me a DM on Instagram at RichardFain28. Let me know you opened your Webull account. Let me know you funded your Webull account. And I'm going to go ahead and send you that Webull tutorial video so you can start building wealth today. U.S. banks could be in trouble. And the reason they could be in trouble is because of their balance sheet and the bonds that are on that balance sheet. See, with U.S. Treasuries, you have two major buyers: private banks and the central bank. Now, the central bank, when they buy U.S. Treasuries, they just simply print money out of thin air. And they buy up a lot of these U.S. Treasuries to do what? Typically to fund the U.S. government. See, the U.S. government issues Treasury bills, Treasury notes, and Treasury bonds in an effort to raise money to keep the country running. See, the U.S. government typically operates at a deficit. It's estimated in 2023, the U.S. government will collect about $4 trillion. And they collect that $4 trillion from taxpayers like you and I. The problem is their expenses are about $6 trillion. So they got a $2 trillion deficit. The way they raise money to take care of that deficit is through U.S. Treasuries. And the Federal Reserve, or the central bank, is one of the main entities that buy these bonds. The other entity is private banks. And that's who I want to talk about a little bit today, because they may be in trouble. These private banks have bought a lot of U.S. Treasuries. Now, when I say private banks, I'm really talking about, publicly traded banks, closely held banks, which are regional banks and credit unions and community banks, right? So I'm saying private bank, but I mean just all banks that are not the central bank. These guys have bought a lot of these U.S. Treasuries, and guess what? They bought them at prices that are not the price of the bond today. The bond prices are going down when interest rates go up. So if I'm a private bank and in 2021, I bought a 5-year bond and I bought it at $5. But in today's environment, that bond I bought for $5 is only worth $3. That's a problem on my balance sheet because my asset went down in value, which affects my ability to borrow money when I need to. That's a problem for a lot of banks, guys. They have a balance sheet full of bonds, U.S. Treasuries, that are losing value. Now, it's not a big deal if that bank can hold that bond to maturity. But a lot of these banks aren't able to do that. They bought these US Treasuries with the expectation they were buying a solid asset that would generate solid revenue through interest income. But then they all of a sudden they ran into liquidity problems, and most of their customer liquidity, and when I say customer liquidity, I'm just talking about customer deposits, were tied up in these bonds, these US Treasuries. And those prices of those US Treasuries had significantly went down. Now, yields on US Treasuries are going up, but that's for new issues. Someone that already has a bond and is trying to sell it on the secondary market, they're in trouble. Because if I'm an investor, why would I buy your bond at a lower interest rate than I can go out and get a brand new bond today at a higher interest rate? I wouldn't. And that's the problem a lot of these private banks are running into. See, the Federal Reserve doesn't have a problem with that. The central bank doesn't, because they can just print money. They'll buy the bonds and then they'll turn around and sell them for whatever they can get for them. Not a big deal for the central bank because they're a money printer. They just print money out of thin air. Your normal private bank can't do that. They can't just print money out of thin air, guys. They have to use their balance sheet and the assets on that balance sheet in order to borrow money when they need to borrow it. And that's what happened to some of these banks that failed. They ran into liquidity problems. Customers started coming in demanding their deposits. And guess what? They didn't have the deposits. The deposits were tied up in US Treasury bonds. And with those US Treasury bonds losing value, they couldn't sell those US Treasury bonds on the secondary market. Even if they would have sold them on the secondary market for a significant decline in value, they still would not have been able to meet the customer withdrawal demands. So therefore, guess what they did? They had to go out of business. Somebody else, another bank, had to absorb their customer deposits, the loans, etc. That's why I'm telling you guys, it's getting worse in the US bond market though, because as interest rates keep rising, new treasury yields will rise. So therefore, anybody that owns existing bonds are going to have a harder time selling them in the secondary market. They're not going to be able to get par value for those bonds. They're going to have to take something less than par value or less than what they paid. And that is a problem for banks. So what do you guys think about this looming problem that's on the horizon for banks here in the United States? Again, I don't believe you're going to have a problem too big to fail banks. But these smaller banks, be on the lookout. Be careful where you have your money. Make sure if you have money in a bank, it's under the $250,000 FDIC limit, because that's what you're insured up to. If you got money in banks in excess of $250,000, you better think about taking that money and spreading it out to different banks so that you're under the $250,000 cap. Now, I know for a lot of us, that's not a big deal, but there are people out there who do have more than $250,000 in one bank. I personally would spread that money out so that I'm under the $250,000 cap. So I'm not subject to a bank failure if they are not able to function in the future because of their balance sheet, because of their assets declining. Customer deposits are considered liabilities, but banks use customer deposits to make investments to earn interest. And that's where you come into play, guys. As customers, they take your deposits and they go out and buy things like treasury bonds in order to get a return on your deposits. The problem is when you guys start coming in and do a run on the bank, they don't have your deposits because they're tied up in these US Treasuries. So please be careful. But drop me some comments down in the comment box and let me know what you think about US banks being in trouble, especially in the bond market. That is going to be a problem for us, I believe, guys, in the coming months. It's going to be a problem. If you want them 12 free stocks from Webull, click on that link down in the description box. Open up that new Webull account today. Go get that free stock. Go get that free money. If you're stopping by the channel for the first time, please consider subscribing, share the video, smash the like button. Thoughts become things. can see it in your mind. You can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. And I'm gonna catch you on the next video. Peace.
Today's video is sponsored by my company, RF Financial Consulting. And in my company, I work with individuals just like you through financial mentoring and coaching sessions. And in those 1-hour sessions, we talk about strategies to help you get to your financial freedom, whether it be through real estate investing, stock market investing, creating additional streams of income, credit card arbitrage, or starting and growing a business. If that's something that you might be interested in, there's an email address in the description box of the video. Send me an email and let's discuss if I'm the right fit for you.